We were looking at the 15,000 rather for the US 30 to become a more sticky number, and also for the S&P 500 at the 1600 there, and expecting a bounce, and that's underway at the moment. And the little move up that you can see through here appears to be in 5 waves, so that means that we'll have an A and a B and a C correction through here, and then further upside through here. Now, we've been looking at this whole move down through here in 2 ways. Essentially a corrective move in terms of an A wave, a B wave in 3 waves, and then the C wave here in 5 waves, which would be the 1, the 2, the 3, the 4, and then the 5th wave here with 5 waves in it through here. So it's quite plausible that this is a low here for the corrective move here as an ABC. So that's one way of looking at it. The other way is an impulse wave in terms of down for 1 and back for 2. And then the 3rd wave moving down through here. Well, it's not actually a 3rd wave because we've actually got overlapping wave structures, as we mentioned here yesterday, from down for wave 1 and wave 2, wave 3 and wave 4 here overlapping. So it would be more of a larger bear market wave unfolding through here in terms of down for 1, back for 2, down for 1, back for 2, and then down for the 3rd here, and then pulling back for this little 4th wave here of well, pretty much where it is now actually. So it'd be better off using sort of larger numbers here. So the 15,500 will be the resistance through this point here. If we can just have a look through here. This is the little impulse wave that's moving to the upside. If you can stay with the count here, this would be up for wave 1 here, back for wave 2. Then we've got 1, 2, the 3rd wave up through here, and it's got 1, 2, 3, 4, 5 in here for the 3rd. So we've got the 1, 2, 3, 4, and the 5th wave is moving up through here. So we've got the 1, the 2, then the 3rd wave is all of this guy here. So there'll be another little high here and back, then checking back into here. So it's impulsive, so there'll be more to the upside here. This is the S&P 500 here, finding support on this trend line here, which is just really an old trend line from this scenario through here. I just sort of left it there because I could see it's got meaning. But look, this the 38.2 retracement level is down, and the wave 4 of 1 less degrees is down through here. So we've still got opportunity for this to come down. Now it can come down in 2 ways, and this is the same for the Dow Jones as well, of course, is that first of all, we could have a shallow retracement in terms of an A and a B and a C and done from here, and then move up higher from there. That's certainly on the cards. The other situation is that, just as I just mentioned there, this impulse wave it's not complete yet, and it's still moving to the downside. The other scenario would be this being an A and a B and a C here, and then we're looking for an A and a B and a C moving up here for a larger B wave. So an A wave, a B wave, and then we'd be looking for 1, 2, 3, 4, and 5 coming down through to here, so bring it down a little bit lower. So that's the other scenario through here. Now, don't forget that we are working across the 1650 here, which is the medium level through here. So we need to be mindful of that, just as the Dow is working through the 15,000 as well. So there's a couple of options here with all of this, and we just need to allow this to play out a little bit sort of further through here. And what I mean by that is that with the Dow and the S&P, and there's also for the FTSE as well, and so forth. So the move up through here, as I just mentioned, this is just the 4-hour chart here. It can be counted. I mean, I've just got it simple as a 1, 2, and 3 here, but it's not that simple because of the overlapping wave structures in through here. But it just gives us the sort of idea there. But the other side of the coin is the A, the B, and the C here, which is highly probable as well. But look, I wouldn't turn like totally bullish until we had support on the 1650 here. Obviously, this is the supply zone through here, and would be sort of retesting that level as such there. The steps for this though would be the 6 in next degree smaller. The 1630 here is the top of minor group 1, subgroup 1 rather, so 10, 20 and 30. So support on top of this here is the first step to, or the second step to the upside. The first is the bounce here, and the bounce here, we're looking at this as being an impulse wave to the upside through here. This is it just on a smaller scale through here, just counting the wave through here, but looking at this here as an impulse wave to the upside. So it's going to come up into this area through here, and then it's going to obviously have some type of corrective process in terms of an A wave, a B wave, and a C wave through here, and then pushing up from that point there. So that's what we're kind of looking at at this point. So you would need to trade these sub-levels through here, or if you're intraday trading, then you may even use the micro levels within here as well. So, we use 1, 2, 3, 5 and 8. Well, then it'll be the same between the 10 and the 20 here, the 1, 2, 3, 5 and 8, so to speak. So that's that really, and then the European market's the same as well, but it's a bit more bearish than the other markets. You can see that it's moved down stronger here, but the thing is that it still gives us the same sort of structure in a way in terms of the 3 waves here, as either an A, B, C, or the 1, the 2. The third wave coming down here, the fourth wave retesting back up to the fourth wave of 1 lesser degree, which is way up here. But let's just track this from this current low here and work it from that point. But, as I mentioned, the 63 is the top of group 1. So it lines up with the 15,000 at the Dow and so forth. So just to be sort of mindful of that. This little move up here also appears to be impulsive following the US markets up, but this is more bearish to the downside, so it's got the bias of having this as a third wave down rather than wave C here, because also too the other little thing worth noting here is this structure down through here is actually picking up speed, isn't it? This trend is actually extending to the downside, so it's actually a growth, and it's growing to the downside. So we need to take that on board here. So we're looking for to see what type of form the structure takes, and also the resistance levels as well, and in this case the 6400 here. The Australian market is a little bit like the FTSE, but the Australian market, is really leading the world really in terms of its movements, in terms of the Australian dollar moving first to the downside, and then the Australian index basically following, but also leading down, because we've been going south here much longer than the other markets. So it's we've got to look to this one for leads really. The market we've been tracking down to the downside here is it's kind of completing in a way, because we've got this down here for wave 1 here, back for wave 2 here, and we can see that the fastest part is in the third wave structure here. So from this bracket to this bracket here, we've got 5 waves down through here for the third wave here, with possible fourth wave here, and then I've been counting this down here this morning. I just really haven't had time to really pull it apart, but it does appear that if we were going to be looking at the Dow and so forth, it means that we would have a low in here already. I'm just not comfortable with the structure that I've got here at the moment. So yeah, I'm just a little bit sort of unsure. Now the bottom line is that there's going to be resistance at the 48 bring it in here. Obviously, there's going to be, this is also an impulse wave up through here as well. So it really, it does give meaning that there's a possible low in play through here, but we would need to have support on the 4,800 here. So this is where the first all the first supply area comes in from, all of this through here. So any sort of rollover, if the market, in terms of trading, if the market comes down through here and then finds support back up on this important number here, the 4772, then go long from that point there. But just realize that this also needs to have its corrective pattern as well. So it'll have a small one here, I imagine, and then a move up to here, and then a larger correction across here. But once again as well, we'd be looking for 5 waves up here in terms of, I can draw this out here, the one, let's start that again. There'll be the 1 in here somewhere, the 2 here. This will be the 3rd wave happening through here. There'll be a 4th wave through here. There'll be a 5th wave up through here. Then there'll be an A, a B, and a C, something like that. But this will be in within group 1 here, let's say. So this is group 2 here. This will be the supporting factor once we hit the 4,800 here. And of course, the group 1 up here, 10, 20, and 30 will be the resistance point on that. So the A, the B, and the C here, and then you're basically looking for some support on here, and then moving in from this way here. So obviously this A, B, and C here can be in all of this space here. So you just need to be a little bit mindful of that. But if we get 5 waves up here, then we'll get some type of A, B, C correction, and then we'll get another 5. So if we get 5 here, then we'll get another 5 over here, and that's the good news. So that means that if we get 5 here, that means we'll be up on Friday, and also following through on Monday as well. Look, the non-farm payrolls are out tonight. They will have a little bit more meaning than normal, because the Feds will be using the non-farm payroll figures as part of their indicators if they should be reducing or maintaining their asset purchase of the 85 billion a month. So that's really going to sort of have some impact on that. And it appears that looking at the currency, seeing the US dollar fall out of bed and the euro rise as much would be an indication that from the market's point of view anyway, that they would be cutting that 85 billion back into smaller numbers there. So yeah, alrighty, let's have a look at commodities. Okay, starting with copper here, or base metals rather. We've had the US dollar fall out of bed, and gold's risen on that, as the euro has as well. The euro and gold seem to have the same sort of correlation and count. So we've got precious metals up, and we've got base metals down as such. So this particular pattern that we've been looking at over the last month across here at the 330 here is just getting a little bit more complicated in terms of we were looking at this starting to count this as an impulse wave to the upside, but the move last night down through here makes this move up here corrective. So what we are looking at, the way we're looking at this now is still that, as long as the market maintains itself above this last low here at the 325 here, then we will consider the whole pattern here as positive, as long as it stays above the 325 and further to the upside. We just got to change the count a little bit here in terms of the A wave up through here. And the B wave that we're looking through here. So the B wave will probably come over here now, and this will be a bit of a triangle pattern that we're looking at through here. So the A, the B, the C, the D wave, and the E wave through here. Okay, if that's the case, then we'll see that move up from that there and move up higher through there. So with that triangle sort of pattern in mind here, this is what we're sort of looking at it, how we're looking at it through here. Because the thing here is that triangles are in 3 waves, and this is in 3 waves. This can be counted both ways, so it's acceptable as 3 waves. This is more likely to be 3 waves here. This is also looking like a three-wave price action here as well, in terms of an A, B, C for the A wave, the B wave, and then the 5 little waves up for the C wave here, and this move down through here that's not complete yet is the E wave here. But look, as I mentioned, as long as it stays above the 325 here, then it will remain positive for this point here. And it's kind of important really, because we're looking at BHP in terms of being, turning sort of positive actually, because this Australian BHP, we've got the 1, 2, 3, 4, 5 here, as you know, and then we've been looking for the A, B, C through here, and we've actually been shorting down through here, so we'll take profit on that today. Even though it may even come down here further, it's just that the indices have turned, and if they do have that A, B, C correction on the Dow Jones and think, well then, we've got a half silly chance of moving up, and this is being complete here as such here, so we should protect what we have at that stage there and see how we go. The US BHP, while we're here, was also sinking a bit lower last night, but end up closing higher there, so it will be interesting to see how it deals with this here. Obviously, if it takes out this low through here, then it's in dire straits at that point there, and then we'll know that we've got a larger bearish picture to the downside. The gold market is pushed further to the upside, and we're just tracking the little 5 waves up. So our wave count on our charts was bearish, but in this section here we've been talking about not really choosing a side as such, but allowing the market to weave itself across the 1400 here in terms of the swing. Each swing here was getting smaller and smaller into a triangle sort of formation here, and yesterday we were looking for the 1400 to become the support or the resistance through here. At this stage here, it appears that we've got a little 5-wave structure up here for wave 1, back for wave 2. This is looking like the 3rd wave coming up through here that may not be completed just yet, so that would still be coming up through there. Once that's in play, then we'll look at the wave 4 here, and then the wave 5 up through to here. So that's what we're looking for here. So perhaps later on, when the volume starts running again, then look for the 1410 as support there, and look on the long side for that point there. And this is the same for the silver market as well. A bit sluggish here, hasn't made new highs here. But I've kind of maintained a bit of a bullish count here in terms of the A wave here, the A, the B and the C for the B wave here. Even though this is getting complicated here, it's still got a positive sort of look to the upside here, and being above the 2300 here would be looking at the 25 medium level target up through here. And the longer this goes sideways here, this is Richard Wyckoff's work, the distance in accumulation would equal the distance in distribution through here. So look, the 2250 is a balance line through here, so finding a way in long through here would be the go, and of course expect a corrective pattern across here, but not too much of a corrective pattern, because there's a spring here that once it's folks see that it's sort of breaking to the upside, they'll be onto that. So but still above the 23, you want to be adding to the position on that side there as well. Okay, now looking at the US dollar, the sort of culprit for this is that, as you know, we were looking at 82.50 as a 61-point sort of 8 retracement level through here. We understood that wasn't looking supportive at the time, and now we're seeing stronger moves to the downside. So as yesterday as well, we'll talk about the euro and the 133.50 target area through there. That seems to be still a bit too small as well. So this is actually still moving to the downside here, and it's impulsing to the downside. So we can say that this strong part here is a third wave structure through here. So the way I see it, yes, we're moving into group 1. There'll be bounce off the 81, which is occurring, which will be a wave 4, then down for wave 5 as wave 3 here, a bounce off 80 as wave 4, and then rolling back in and retesting this move down through here as wave 5 well, if it is in anyway, it doesn't really matter that much. But this internal count here, the 1, the 2, the 5 waves down for the 3, the 4 and the 5 here, then a larger bounce back up in 3 waves for the B wave here, probably back to the 82, and then another move down through here. So there's still further to go here, and this reflects back in the euro, of course, to the upside here, and this is the daily chart here. It's moved up quite strongly, and as mentioned yesterday, that the 61.8 retracement level of this move down through here is up through here. But looking at this move through here, it's quite strong. Yes, it could be a spike and roll over it at in these zones here. But it will be interesting to see what the non-farm payroll figures are tonight. There will be some sort of fireworks there, I guess. So yeah, look, we need to see this a little bit higher through here. One of the things here is that the 133 here is the top of group 1. So the normal sort of case scenario through here, if I just got this on a smaller chart through here, yeah, this will do. So, you can see that this is still extending to the upside here. But one of the main points here is that in terms of what's going to happen next would be the classic trading levels pattern. So we've got the arrival here. We've got the reaction that's happening now, okay? Then we'll have the first high above the level, and then we'll have the A, the B, and the C here, and then finding support on here, and then moving further up from that point there. So what you see here is not what you get next. You pretty much always get the opposite. So bear that in mind. And you can also, gold will be following this pattern in its own way as well. So the gold and the precious metals and the euro on the same boat there. The Australian dollar on the 20-minute chart here we're basically looking for a bounce off the 95. Yes, look, it came a bit lower, big deal, but the thing now is that we've got a very clean little 5-wave structure in through here as I'm labelling it wave 1, but what we've really got here is we've got 3 waves here, but I'm labelling it in this way, in a 3rd wave here, and a 4th here, and a 5th here, because of the personality of the 3rd wave here. Because normally in a corrective move, the A wave will be the sharpest and the C wave will be the laziest. So yeah, this is definitely a strong 3rd wave here. This will be the 4th wave here. I've just put the 4th wave tucked in here when it first came down. But when you do get a strong move here, it's quite a sort of a big event in human consciousness. Takes recovery time, and that's what a wave 4 does, and that's why it's sort of sideways and complicated. So, but the good news here is that because it's trading below the 96 here, when it does find support on the 96, you know that you can trade it to the long side. But don't expect too much of it, and probably mark me wrong here either, but just in textbook stuff, if you've got the 3rd wave here, then the wave 5 is normally the same length as wave 1 here. But I don't think that it's going to be normal because of the Feds using the non-farm payrolls as one of their probably many indicators, of course, of what they'll do with things. But it will have a telling story, certainly for the markets emotionally. So just be mindful of that. Alrighty, so look, if we're starting to see a 5-wave structure here, as the Australian dollar being quite a leading indicator, then that's going to follow through onto the cash market and also into stock as well. So with our banks and that have been sort of leading the way down, we've been basically tracking them down in 5 waves, and we're looking for a low of those 5 waves, and this may be it here. So it may be this may be the point in time to cover short positions, at least lock them up, lock in extra profit here. And yes, look, I certainly we could be wrong with the situation with the non-farm payrolls and that, and we see further downside because the ADP figures that came out on Wednesday were softer than expected. So that's normally a lead into the non-farm payrolls as well. So that's on the back of my mind as well. So look, it's just a little bit tricky, but it's best to the first rule in trading or investing is to protect the asset, and protecting profits is the first thing that needs to be done. The flip side of this, if we do get a positive outcome on Friday here, then that's likely to follow through into the Monday, profit taking on Tuesday, lots of swings on Wednesday and so forth. So if we do see a positive move, which is highly likely, then we're going to see a good couple of days of it. So switching all your shorts to net long would be one way to do it if you're brave enough. The other way is to just log in profits and stand aside. So there's, depending on your own personality and trading plan, then you need to initiate that. But with our robo trades, we'll just put the stops down, lock in a little bit of extra profit. We'll just try and take the middle path on our decision making with the service. But of course, you can be much more aggressive than that. Alrighty, thank you for listening.